Thank you so much. Guys, we have an exciting conversation planned. As we're getting prepared and our other panelists join us, can I see a show of hands, who has a general idea of how blockchain works? Okay. I'm used to speaking at technology conferences, and that's when you see a wave of hands go up. But, to start us off, Richard, can you tell us a little bit about how blockchain can be leveraged in real estate and driving property ownership?
Yeah, sure. So I'll start with an intro. My name is Richard Otolo. I'm CEO of a startup called Yield Guru. We are a technology platform in the blockchain space. What we do, we tokenize property, and that's where blockchain comes in. And just to give an example, maybe Andrew, you're new in Kenya relatively, and you want to buy property, say, in Ngong. Right now, the process you'll undergo, you have to do a land search. First of all, somebody has to go to a registry and find out whether the person selling you the land actually owns it. Then after they've searched for it, you go to the owner, you sign a contract with them. Then you go to the bank, they need to finance you. They need some security, maybe a pay slip, or maybe you have another piece of land that you own. And so it goes on and on. In Kajiado, maybe that's where you want to buy, there was an issue with title deeds, lots of corruption. They in fact stopped issuing title deeds at some point. So with blockchain, what we're saying is, why have somebody go and search for that title deed? What if it was represented online? You could go quickly and confirm that maybe I'm the one selling it to you, I actually own that piece of property. The bank can go and look at that title, and they don't have to go do the search for themselves. Whatever it is they do, I don't know what they do when they want to give you a loan, they can see it for themselves. And so issues around corruption, which we face a lot here, can be dealt with. Issues around accessing financing quickly can also be dealt with. And generally, it means I can buy property much faster. The other issue is that now with expatriates coming into Kenya, no offense, prices are going up, so it means property is becoming more expensive. With blockchain, I'm able to break down property into smaller shares, the same way I can do it for Safaricom shares, for example. And that means I, as an ordinary Kenyan with not a lot of money, I'm able to still invest in real estate and make some money from that. So that's how ways blockchain can actually help.
Okay. And I'm assuming, blockchain technology can fight other things like land theft and stuff because it gets rid of that bureaucracy that, theft can take place through, correct?
I don't know. I don't know if you can stop the theft. People will still steal, but maybe it will help you prove ownership much faster.
Yeah.
You can go to the app and tell you, boss, I own this piece of land. Why are you stealing my land here? It becomes much faster to confirm. Instead of going to court back and forth, it's very easy to see this person is encroaching on my land and I can prove it immediately.
Okay. Now over to Trevor. Your company, Alpha Block, you're doing a lot also with blockchain technology, but more on the lines of working with a lot of institutional investors and such. Diving deeper into this conversation around blockchain in real estate, what are some of the products and such that we can provide investors through the power of blockchain that may not be able to be efficiently realized with pen and paper?
Yeah, technology is just a tool. So you can do basically the traditional products, but then on top of those products, you can layer interesting products around it efficiently. Because basically, blockchain makes things very efficient. So whether it's about a rent-to-own product, whether it's about flipping assets, there's people who are very savvy in real estate investing. They know how to flip assets. Whether it's just installment payments to own an asset. The main thing it does is provide efficiencies in that process. We all know the challenges that we have with the lands registry. We know the challenges we have with perfecting the title or maybe getting a loan from the bank. At the end of the day, it's not like it's changing the world with this new touch of blockchain. It's just providing efficiencies into this existing value chain of investing in real estate. But the value of having a token which is on the blockchain allows you to innovate around these existing products. So let's say you have someone who invests in bonds, for example, or someone who's investing in commercial papers. You can also create derivatives around that that are very easy to, from an administration perspective, link it to different asset classes to, instead of having a large fund do it, you can do it for yourself. You could say, I'll buy some bonds here, I'll buy some income generating real estate here, I'll distribute the income in this way. So at the end of the day, it's just a way to provide efficiencies, but with that tool, it allows you then to become creative and build different financial products around.
Okay, and because this in a way can be fractionalized, how does that enable more people, and I think Richard, you can touch on this too, how does that enable more people, more institutions to invest in real estate?
So just think about the challenges we have as individuals sitting in this room. You want to buy real estate. Maybe you've been saving up for it. You're thinking from an investor perspective, so you want to cut out the loan because you're trying to, protect your returns as much as possible. But the asset maybe costs $150,000, and you don't put the full $150,000 into this asset that you've seen. So now, if you fractionalize it, that gives you the opportunity to enter at a much lower entry point.
Like $1,000.
$1,000, $10,000, whatever you want, but without having like the big overheads of starting to call a lawyer. That's the value proposition Alpha Block provides. Is the normal closing costs would cost like 7%. If you add it as an investment product, you need someone who's going to give you like the financial product and structure it, which will cost you even extra. So when you reduce the entry barrier, that opens up the market to many other people. Then, of course, improving the ability to sell a lot faster and to more people.
Yeah, just to add quickly, it's not a new concept. We all know about rates. The problem with rates, if I'm a landlord in Pipeline, I want to set up an apartment, setting up a rate is expensive. So what blockchain is doing, Trevor is saying it's customizing. It's making it easier for me to buy that particular piece of real estate. Again, the concept of shares. If I wanted to buy shares in Safaricom right now, 24/7, the market operates. I still have to go through a broker, but with blockchain, now we tokenize. There's also something called smart contracts. It works 24/7. I don't need to pay a broker to be able to buy shares in a particular property, essentially. So with tokenization, blockchain, faster, cheaper, accessible. We're making it more accessible to people to be able to buy real estate.
Okay, now over to Charles. What your company, Nivera, is doing is a lot of, from my interpretation, is kind of almost being a marketplace and bringing together different players from, the developer to the end investor to financiers and so forth. Tell us a little bit about how you are using technology to further the cause of accessible property ownership.
Thank you so much, Andrew. As you have introduced me, my name is Charles Nyandia. I'm the current CEO at Nivera. Nivera is an online marketplace, and the whole idea is to bring the key players together. That is the key players in the industry. That is the property developers, property buyers, as well as the financial sector. When we talk about financial sector, we are targeting the capital markets as well as the cooperatives. So the whole idea is to create sustainability by looking at how all these parties can work together to create some benefit for the end customer. We are looking at the risk that is there in the market and the risk that is associated with coming up with property investments. Talking of off-plan projects or even ready projects, there are risks that are associated with that. And our role is to de-risk that whole process so that we can make it to be more inclusive and more accessible, specifically tailored for the middle segment, or rather the middle segment in the society and also the lower income segment. Yeah, so we get involved for us to perfect that by way of getting into the details. If it's a project that is ongoing, we get involved through our expertise to reduce the risk when it comes to project planning, arrangement, the designs also the selling part and management. The whole idea is to fulfill the need for most of the investors because most of our clients, by the Andrew, over 90%, they buy our properties for investment. And they range from 1 million Kenya shillings to 3.9 million shillings. And that's where we really concentrate so that we can target that particular market that has been investing in buying, empty land or empty plots, so that they can convert that into owning an apartment that can generate rental income. So that's what we do, with the main value being to de-risk. As you are aware, people have lost money in Kenya when they are investing in real estate projects. And this simply because of the, natural risks that come when proper planning are not done, from the onset all the way to completion. Yeah.
Okay, perfect. Now over to Samuel. Your company, GDMB, you have a product called Open Spaces. Now we're stepping a little bit away from the investment side and more on the value chain building up to the final product. Tell us a little bit about Open Space and what you do.
Excellent. Thank you very much, Andrew. So first and foremost, just a bit of introduction. So I'm Samuel Gethukia, founder and director of General Design Management and Building Company. And it's a company that is locally registered and it leverages essentially on digital technologies. So we've partnered with Open Space and Matterport. And essentially what we're looking at, and this is based on my background as a civil engineer, project manager, someone who has been on site essentially for the entire life cycle of projects, to essentially convert what we say brick and mortar into actionable data. So it's both the process which we digitize into data and the final asset, which essentially we come in and digitize it as a digital twin. So what we're saying is that we're looking at a process that's going to be transparent all through. So the way Open Space works is very simple. It's a 360-degree camera mounted on top of a hard hat, and someone walks around the site. What that does is that it creates a Google Street View of your construction site. And this are actual site conditions. And what happens is that each and every time, or the frequency, say, weekly over a period of, say, 2 years, is data that is actionable and it's data that's valuable. And we're looking at that data being the price tag that comes into blockchain and the rest. Because what we're saying here is that we have data that you can use post-construction. So you have easier ways of doing your facilities management on account of having that final data. And then we are getting into a realm where you have a digital twin as a proprietary digital asset of your physical asset. So you have a digital twin and you have your physical asset.
Okay.
Yeah.
And so is this something that you typically work with the developer, throughout the stages to do? How do you work with the developer and, what's the value for the end client?
Okay, so yes, so we work all through from day zero. So essentially what we're saying is that we're looking at all the data that the project is going to generate. So as we are all aware, from day one, it's going to be information that's going to be generated by the project. So what happens is that we handhold the client ourselves in terms of getting the client to understand the product. But the idea is to have that ownership of that data as part of the asset portfolio at the very end. So we are so used to getting, let me say, I can call them user manuals of assets at the end of a build. So what we are saying is that we are converting that to something that is more user-friendly because it's visual. So this is computer vision that you get at the very end as part of your asset. So you get your asset and a digital version of that asset. And just to mention something about REITs and the realm that we're getting into. So the minute you're investing in an asset class. We're going to be getting into a point where you will want to know what that history is, what it was built out of. And we are saying that now you have the capability using tech and digital tech to have all that data embedded together with your physical asset. So you have all that data that you can be able to use later, and it's data that can also be transferred from one property owner to another as part of the sale.
Okay.
Yeah.
Now, I guess taking a step back to our conversation earlier on blockchain, I'm interested in how bringing blockchain into real estate, what are the risks and the benefits that can bring to liquidity, to bringing liquidity into the market? Because we all know that real estate assets historically are not super liquid.
Yeah, sure. I mean, at the end of the day, how you design a platform with buyers and sellers doesn't matter whether you're using blockchain technology, normal database technology. You really have to think through who is the buyer of this asset, who is the seller of this asset. In the case of the secondary market, who is going to participate in that secondary market? Because it's, at the end of the day, whether it's about technology or not technology, it's all about demand and supply. So, for example, at Alpha Block, our investment platform, well, I wouldn't say specifically focuses on institutional investors. We are a retail product. We're a product to enable retail customers to invest in real estate. But how we enable the secondary market is through the institutional investors. And I'll take this, let me give you this example. So you have 100,000 investors. Maybe the portfolio is worth about $3 to $5 million. And from that, you have maybe 2 to 5% that need a secondary market sale. So what you do is simply allow institutional investors to come in and participate as if it's a capital markets product and say, I'll put a buy order on these shares that are X amount below market value. So they're looking to buy real estate. They're looking to have exposure in real estate, but they're not looking to buy an apartment of, $100,000. They're looking to buy a portfolio. But this gives them a way to buy into that. So yes, the risks will still be there, but how you design the ecosystem around the primary market and the secondary market is very important. On top of that, if you don't participate or rather design the ecosystem to be with entities that understand the product. And then again, that is where the blockchain comes in. Because even if you've not been part of the building process, of the management process, all the information of the asset is captured on the blockchain. Okay. So it means auditing the asset is very easy to do. It's a touch of a button. Because it's a simple business rule that you choose and you say that I want to only invest in assets that meet this certain criteria. Our platform collects that information to enable someone to assess that information and meet their criteria. So again, you reduce the risk of someone in the secondary market not buying because they're comfortable in the information that they have on the asset that is being sold. And that's one of the ways that our platform is reducing the risks of the secondary market. And that's also one of the value propositions of using blockchain because it's auditable. It's a way that you can open up to other participants in the ecosystem to have access to. And that information cannot be tampered with. So then people trust that information is correct, whether it's the cap rate information, whether it is the information on the tenant's behavior, how are they treating this particular asset. All of that is actually captured on the platform, enabling someone to do due diligence. But it doesn't require someone to have to take the traditional process to have an understanding of whether what is being said is actually what happened.
Okay. Yeah, just to add quickly, Trevor is creating liquidity in secondary markets through institutional investors. Yield Guru is targeting more retail investors, just a common mwananchi. So if I've bought tokens in a property in pipeline and I want to sell them, we create a marketplace. similar to buying shares on the stock exchange. And in the same way, the stock exchange is reducing risks by one, regulation. Right now, we are trying to, like Trevor, myself, getting into the CMA sandbox so that we are regulated. So the same way I can go to a stockbroker and buy shares and I'm comfortable because they're licensed. So that's the direction we're also heading to. Again, the underlying technology, there is a risk of, you may be heard of this, smart contracts being hacked. So the technology itself also needs to be vetted and audited. And there are people who already provide that kind of service, essentially. Yeah, I could add that too.
Okay. And I know we don't have too much time left, but I still got a bunch of questions. We could do this for hours. Now, Charles, one of the things you had mentioned to me before we got on stage was that you've been able to achieve 16% ROI with your projects. To be honest, when you said that, I was like, damn, not bad.
Yeah.
But tell us a little bit about that. How are you able to achieve that through, de-risking affordable housing projects?
Yeah, it's really interesting to see the developments in the investment market, and we realize that it's diverse. And one way of driving finance towards affordable housing, it starts with definitely designing them in a way that you can be able to reduce cost, and of course create good margins for the investors. It's good to mention at this point that we are a crowdfunding platform, which is an alternative way of creating liquidity for projects implementation. And we create an opportunity where someone who is buying a house and they can't afford to raise the whole cash, they do a deposit and then they can be financed the balance by different people. So that is as far as the capital market is concerned. Then our platform also connects the cooperative sector so that they can have visibility and access to the people that they finance, the affordable houses. Just like you can imagine a car, when you're financing a car as a lender, you do your tracking, all that, and it's easy without going through the bureaucracies of the government. That is a solution we have created, all geared towards creating liquidity for projects. So when you invest on someone, or rather you invest on someone who is fundraising, you can get good margins. We are talking about 16%. One reason why it's 16%, number one, it's because of the environment, investment environment. The rates going higher. And of course, that means that you sacrifice your margins for the sake of the clients. You always realize, we survive on growth as startup companies. And of course, we are able to make very good arrangements with the developers so that we can reduce costs when it comes to project implementation. And that benefit ultimately goes to the buyer. And of course, create an opportunity that this developer can be able to turn over faster and be able to develop more than they could have done using the normal instruments. So that's how we do it.
Okay.
Thank you.
And back over to Samuel, one of the things that your company provides is 24/7 monitoring and such. Why is that important for the end buyer? It sounds like a dumb question, but why is it important?
Let me just say we are, in terms of an African culture, we are doubting Thomases. We really want to see exactly what our project looks like. It's important for us to have a visual, whether it's 24/7, you want to have it weekly, you want to have it monthly. And this comes in, especially on a case where you're investing on a, let me say how can I put this? Sorry, let me backtrack. So when you're investing on a project and you're putting in money, and what you want is information coming in from the construction team. I know we have the whole idea of getting the WhatsApp images coming in through, but we are saying you have a platform now verifying the work done really quickly. So based on the frequent monitoring, you're able to look at what was done previously, especially when it comes to auditing, and get to understand what has been done now, and you're able now to release the payments effectively. Essentially, what we're saying is that the more you monitor it and you have, let me say, the ability to look at it from anywhere in the world, it becomes much easier for you to trickle down the funds and avoid any disruptions when it comes to the project.
Okay,
Yeah.
thank you. And I know we're at the end of our time. Just
Yeah.
real quickly,
Yeah.
can each of us go through, 10 seconds, tell me what do you think is going to be the most disruptive technology in driving property ownership in Africa? Let's start with you, Charles.
I think I would say it's getting an alternative and a practical alternative for that matter to create liquidity for the developers so that we can take care of the supply side when it comes to housing, and as well creating incentives to the buyers by way of getting down to the levels and venturing into the mass market so that as many people as possible can take part in the real estate sector, or rather in private, or rather in property investments.
Okay, thank you. Richard?
I think it's a combination of three techs, actually AI, blockchain, IoT. AI can help with searching for properties in a customized way. I know it's something Buy Rent Kenya is doing. And then for blockchain, in terms of transparency, I've already talked about that. Then IoT, having your house connected with sensors and being able to gather data from that particular house and have visibility as he's doing with the cameras and all. I think it's a combination.
Okay, Trevor?
From my perspective, maybe I'm biased, but also the data states that blockchain will also be as influential as AI. But in real estate, because the titling process is one of the biggest problems we have on the continent, actually around the world, not just Africa, but the global south, once we solve ownership rights, we will be able to design products that enable ownership a lot easier, opening up the ecosystem and the value chain of financiers, off-takers. Everyone will be able to participate efficiently. And so blockchain is the answer.
Thank you. Samuel?
Yeah, for me, it's having ownership of the data as well. So having ownership of the data during the process of construction and ownership of the data of your as-built information. So when you're looking at the IoT and anything that will show performance of your asset going forward, gives you better comfort of exactly what you've bought into. You're getting sustainable buildings, and essentially there's a performance threshold that you're expecting to see. And digitization, getting that data allows you to have that comfort.
Okay.
Yeah.
Gentlemen, thank you so much for your time today. It was an absolute pleasure. And if anyone's around and wants to talk more about, technology and real estate, technology and property ownership, we're going to be around and would love to talk with you. So thank you so much for your time.
Thank you.
Thank you very much, Andrew and team.